Are you worried about how inflation could impact your finances? Don't panic because Warren Buffett has some valuable insights on how not only to protect your wealth, but also make money during inflation. If you're interested in anything finance, then you've probably heard of the American business magnate Warren Buffett, renowned for his entrepreneurial prowess and world-class investment strategies. With a net worth of a whopping $103 billion, Buffett has long been vocal about the issue of inflation and has shared several strategies that can help you make the most out of it without being negatively impacted. In this video, we will discuss the most crucial ones, so make sure to stick around until the end. Inflation has become one of the hottest topics of our time as we approach another recession, leaving a devastating mark not just on the American economy, but Europe and other parts of the world as well. But let's pause for a moment and focus on you. Are you content with your future prospects, or are you feeling financially overwhelmed by expenses that make it hard to make ends meet? If so, you're probably looking for a way to secure your financial stability without resorting to an economic overhaul or taking on massive debt. If you're seeking a way to build a financially stable future unaffected by inflation, then we have some fantastic news for you. We will now divulge Warren Buffett's secret strategy and life-changing advice on how to make money during inflation that'll change your life forever. So without further ado, let's get started. When it comes to the perils of inflation, Warren Buffett has always sounded the alarm bells, urging us to protect ourselves from its destructive impact and, at the same time, leverage its potential benefits. Thanks to his extensive experience in investing, he's seen firsthand the detrimental effects of inflation and doesn't want you to make the same mistakes he did while leading Berkshire Hathaway. Buffett has provided us with a comprehensive analysis of how inflation can affect us from the inside out. But have you ever wondered why he's so fixated on it? Well, that's because he understands that inflation is something you can't take lightly. Inflation and purchasing power are inversely proportional, meaning that as prices rise, your purchasing power drops. Buffett has been highlighting the fact that inflation is becoming more prevalent and unpredictable with each passing day. We are accustomed to rising prices, but we mustn't turn a blind eye to them. Additionally, he emphasizes that even a 5% bond interest won't be enough to sustain you for long, as it will disappear as soon as inflation reaches 6%. This is precisely where this video comes in to help you. We'll take you through 8 timeless steps from Warren Buffett to ensure that you thrive even during inflation. Trust us, you won't want to miss out on this. Number 1. Invest in good businesses that can handle inflation periods. What makes a company worth your time and money? It's simple, really. They need to have the power to price their products flexibly. Take Apple or Coca-Cola, for example. These guys can hike their prices up, and their loyal customers will stick around because their products are worth it. That's a clear indication of a company that can weather the storm of inflation. On the flip side, some companies see inflation as an opportunity to cash in on their customers' desperation. Companies like Kroger, CVS, and TJ Maxx's parent company, TJX, saw massive profits during the COVID-19 pandemic. They knew exactly when and how to raise prices without losing too many customers. It's almost crazy how they managed to rake in a whopping $99 billion. Of course, they do have to take the public's expectations into consideration, but they're pretty darn good at playing their cards right. Number 2. Compare returns. It's crucial to understand how much return you're getting from your investments. Your investments work for you 24/7, but you need to calculate the return you're making from them. Even if your investment returns 10% annually, inflation can pose a serious threat. With an inflation rate of 7 or 8%, you're left with only 2 to 3% in returns. Although interest rate bonds may seem like a safe option, they are still risky as per the recent inflation report. With interest rate bonds, you may receive an annual return of around negative 2.2%, which is not good. Even if your investment is generating a small profit, it's still better than nothing, or worse, losing money. Number 3. Avoid traditional bonds. Buffett has warned investors that bonds are not a good place to invest in an inflationary environment. This is because bond investors can be severely impacted by inflation when interest rates remain historically low. According to Buffett, buying a 10-year bond with a 2% yield is equivalent to paying 50 times earnings for a business, but unlike a business, the bond's earnings cannot grow. He added that fixed income investors such as retirees, pension funds, and insurance companies worldwide face a dismal future. Number 4. Understanding the limitations of gold. Many families and investors hold gold as a safe haven asset during times of economic uncertainty or inflation. While the price of gold has surged in recent years, renowned investor Warren Buffett does not consider it a productive asset, which is one that generates income or produces something on its own. Unlike stocks or real estate, gold does not provide any ongoing cash flows or profits, and its value remains constant without any growth potential. Moreover, gold is an unproductive asset that cannot be used to create additional wealth, and its price movements are unpredictable and driven mainly by sentiment and demand. Therefore, investors should consider other productive assets that offer more potential for long-term wealth creation and income generation. Number 5. Look for businesses that require low capital costs. Starting a business with high capital costs can be a significant hurdle for entrepreneurs. To overcome this barrier, you must work smartly instead of working hard. You can choose low-cost businesses that allow your skills and expertise to shine. For example, you can create and sell digital courses on various subjects, such as Instagram marketing. By gaining expertise in a high-demand skill, you can earn decent income by creating and selling courses without any significant investment. Becoming a content creator, such as a graphic designer, developer, or copywriter, can also be a productive and profitable venture without any investment. Your skills and talents can attract popular brands, which can collaborate with you, and you can earn a passive income by monetizing your social media content. You can also develop software-based solutions that require a one-time cost, such as online tools that generate a significant return on investment. Another low-cost business idea is event planning, which requires your excellent planning skills and minimal investment to get started. There are many other ideas for low-cost businesses, such as building digital assets, offering social media consultation services, starting digital and affiliate marketing agencies, and much more. By selecting a low-capital business, you can avoid the significant hurdle that many entrepreneurs face and achieve your dream of owning a successful business. Number 6. Limit your wants. Inflation can be a major concern for anyone who wants to maintain their standard of living, but it doesn't have to be a death sentence for your finances. One way to prepare for the impacts of inflation is to limit your wants. As Charlie Munger, Buffett's business partner and vice chairman of Berkshire Hathaway, puts it, one of the greatest defenses to being worried about inflation is not having a lot of silly needs in your life. If you can reduce your expenses and avoid frivolous spending, you'll be better prepared to weather the effects of inflation. It's important to remember that the things we buy often come with hidden costs, such as maintenance and repair fees, insurance premiums, and other expenses that can add up over time. By limiting your wants and sticking to your needs, you can avoid these additional costs and reduce the strain on your finances. One way to help with this is to track your expenses using a budgeting app. This can help you see exactly where your money is going and identify areas where you may be overspending. For example, if you find that you're spending a lot of money on dining out or entertainment, you can look for ways to cut back on those expenses without sacrificing your quality of life. By being mindful of your spending and making smart choices, you can reduce your exposure to inflation and ensure that your finances are well positioned for the future. Remember, it's not about depriving yourself of the things you enjoy, but rather about finding a balance between your wants and needs that allows you to live a fulfilling life while also being financially responsible. Number 7. Look for companies that can raise prices during periods of high inflation. In an effort to protect your investments from the volatility of inflation, it's important to know what types of companies can maintain or even raise prices during inflationary periods. While we've already established that precious metals are not necessarily the best option, following the lead of Warren Buffett can be a great way to ensure the growth and stability of your investments. Buffett is a big fan of investing in stocks, but it's important to do so carefully and with knowledge of the market. He advises not to take quantity for granted when buying stocks. Every share counts. It's important to analyze the small details of a stock just as you would when considering the sales capacity and competitive power of a physical store. Choosing the right time to buy stocks is also crucial. Buffett advises being patient and taking your time to analyze and observe the market. It's important to avoid the temptation to invest in a stock simply because it's currently popular or trending. Buffett's famous saying, "Be fearful when others are greedy, and greedy when others are fearful," is a good guideline to follow. In addition, it's wise to choose stocks that you can hold for the long term, ideally at least 10 years. This allows you to fully analyze the nature of the company and make informed decisions about the future of your investment. Of course, investing in stocks is not without risk. To minimize the risk, it's important to limit your wants and avoid frivolous spending. By following these guidelines and being mindful of your spending habits, you can build a strong foundation for your investments and weather periods of inflation with greater ease. Number 8. Invest in yourself. Let's delve into the last step in Warren Buffett's guidelines, which is to invest in yourself and be the best in your field. We've previously discussed investments in various fields, but now it's time to focus on you. Whether you're an engineer, teacher, baker, office worker, startup founder, or doctor, you can take steps to cope with inflation by investing in yourself. The key is to continually develop your skills, stay updated with new technologies, and take courses that will enable you to provide valuable services in today's market. Inflation brings stiff competition, so you need to be proactive and make yourself indispensable. It's important to note that the cost of your education was paid in old dollars, but you must provide services in today's dollars. This means you must keep up with the changing times and evolve with the market to stay relevant. By doing so, you increase your value and make yourself an asset in your industry. Warren Buffett's guidelines are not just for coping with inflation, they're also valuable for improving our lives as a whole. We never know how high or far inflation can go. To be prepared for any possible outcome. In light of this, click here to learn the secrets of getting rich from John D. Rockefeller, which we will break down one by one. By investing in yourself and following the guidelines of successful investors like Buffett and Rockefeller, you can pave the way for a more prosperous future. Keep these steps in mind, and you'll get through every year without worrying about inflation. Thanks for watching, and if you learned something from this video, make sure to like it, subscribe to the channel, and ring the notification bell for more videos like this.